Hi everyone, Bryn here with another episode of Financial Frustrations, presented by Metherell Financial. Today's frustration relates to life insurance, specifically, how much coverage do I need? Of course, the answer will depend on your unique situation, but there is a general rule of thumb or list of items that you'll want to consider. To help explain, let's meet a couple neighbors. First off, we have Dante, a 37-year-old teacher, and his wife Rachel, a 37-year-old office manager. They have 2 young children and own their home. What items should be considered at this stage in life? Number 1 is outstanding debt. For Dante and Rachel, they have a mortgage of $474,000 plus a car loan of $42,000. Number 2 is children's education. Dante and Rachel have started an RESP for the children but haven't saved enough yet. Both parents want to know that the kids' education will be taken care of if one of the parents passes away. In Ontario, the average post-secondary education for a 4-year program costs approximately $80,000 per child. Number 3, replacement income, which helps ensure the family will be able to maintain their standard of living. As a rule of thumb, the surviving spouse needs 60% of the family's household income until the youngest child is no longer financially dependent. Let's assume Dante and Rachel both make $85,000 per year, so their household income is $170,000. Taking 60% of this, we get $102,000. Now, if there was only one income earner, there would be a shortfall of $17,000 per year. Assuming they want to cover this income gap for 20 years, they would need approximately $307,000 to conservatively invest to provide this income. And number 4, which is final expenses. This is simply to have the funds available to cover the costs of a funeral, celebration of life, and final arrangements. An approximate cost in Ontario is $15,000. Adding up these 4 items, it is evident that Dante and Rachel each need $998,000 worth of coverage. But there's actually a price break or a volume discount offered at $1 million, so by rounding their exposure up, they get a little extra coverage for a better price. For $1 million of 20-year coverage, this would cost Dante approximately $70 a month and Rachel approximately $50 per month. Now, what would be someone's insurance needs later in life? Let's meet Nico, a 70-year-old retired engineer whose wife has passed away. Nico's children are all living on their own and he has paid off his mortgage. It's clear that Nico's insurance needs are different than that of Dante and Rachel, but they're still very much in need. Let's have a look at the items to consider at this stage in life. The first 2 items are similar to ones that we have already discussed: final expenses of $15,000 and any debt or required payments. In Nico's situation, let's assume he is debt-free. Number 3, estate costs and taxation. The largest insurance policies sold today are not to protect growing families, but actually to prevent estate shrinkage and pass on wealth to the next generation. Depending on how Nico's assets are organized, he may be subject to large estate costs, such as legal, accounting, and executor fees, as well as probate and income tax. To learn more about estate organization and how to avoid or minimize these costs, be sure to check out our estate planning resources. And number 4, legacy or special monetary bequests. Nico's wife passed away from cancer, so it's important to him to make a donation to the Canadian Cancer Society of $50,000. Nico also has 5 grandchildren, and he would like to leave them each $10,000. Adding these 4 items together, we can see that Nico's insurance needs are $200,000. For Nico to get $200,000 of permanent coverage, that would cost approximately $1,000 per month. Now remember, everyone's situation is unique, so if you're not sure how much coverage you need, I encourage you to click the link below to set up a quick 15-minute call. No sales pressure, just information. We've helped hundreds just like Dante, Rachel, and Nico get the coverage they need, and we can help you too. Well, that's all for this episode of Financial Frustrations. If you've got a frustration you'd like addressed, please submit it below.